I'm pleased to introduce you to the Financial Crime Series e-learning package, which has been put together by THA Partners and TomJak e-learning. THA Partners is run by Jonathan Ledwidge, an experienced professional in financial crime training, whose background includes teaching one of the largest UK bank staff globally on this topic. TomJak is run by Chris Hollands, who has many years of experience of investigation in the fields of fraud, sanctions and money laundering. Both of us are specialists with a strong background in audit and risk, with a particular emphasis on fraud, AML and sanctions. This demonstration module is illustrative and cut down from one in the AML series on the subject of terrorist financing and tax evasion. It runs for about 30 minutes, but you can skip forward at any time. It's designed to give you a feel for the content and layout of all of our programs, as well as an overview of the four main topics. That's governance, AML and terrorist financing, sanctions, and finally, bribery and corruption. Every module starts with an explanation how each part of the course is linked, the modules which comprise the current course, and then sets out the individual module learning objectives. You will note that individual modules contain examples and pictures to bring the subject alive, as well as a series of case studies to illustrate major points. Each module concludes with a formal test on the material that's been covered. The pass mark is set at a default of 8%, but can be adjusted to suit the client. Certification can also be provided for those users who use our LMS. As this is the demonstration module, we've taken the opportunity to add several slides at the beginning, which illustrate the content in each of the other three modules in this series. Taken as a whole, they comprise a comprehensive and professional level approach to the topic of financial crime. The course is designed for all levels of staff, but is somewhat more advanced than that used at the entry level, and therefore is suitable for people whose job requires more than a passing knowledge of the subject matter. What I'd like to do now is let my colleague Jonathan Ledwidge tell you all about the Financial Crime Series and perhaps to give you a little bit more detail on the AML section of the course before I then go back and give you more of an overview of the rest of the series.
The Financial Crime Series consists of 4 courses. Course 1 is on governance. The current course is on AML and terrorist financing. Course 3 is on sanctions. And Course 4 is on bribery and corruption. The course on AML and terrorist financing has all of 8 modules, of which this is the second, terrorist financing and tax evasion. But it is a comprehensive overview of the subject and the policy frameworks that need to be put in place, as well as the kind of risk management controls that need to be put in place, including CDD, and the risk-based approach to effectively manage money laundering and terrorist financing risks within organizations.
Before moving to the module learning objectives, I'd just like to give you an outline of the 3 other courses that we have available in the Financial Crime Series. And the first of these is governance, and that has 6 modules. The first module looks at the governance framework. The second module examines the nature and scope of financial crime risk. Modules 3 and 4 then examine in some depth the financial crime compliance risk control framework. And Module 5 then looks at sustaining the financial crime compliance framework, in other words, putting a framework around that and making sure that people adhere to it. Module 6 then covers overall policy and standards from a governance perspective. The third course in this series is on sanctions, and that has 7 modules. It starts with an introduction to sanctions, and Module 2 goes into some detail on the legal and regulatory framework behind the whole sanctions process. Module 3 examines the major sanctions regimes, and Module 4 looks at sanctions from a customer due diligence perspective. Module 5 takes this a little bit further and examines sanction screening. Module 6 then takes a risk-based approach to sanctions and outlined the sort of things that you need to put in place. Module 7 then comes back to talking about the sort of policy and standards that you need to have in place to cover sanctions. The final module in the Financial Crime series is on the subject of bribery and corruption, and there are 7 modules available. The first module gives an introduction to the subject. The second again looks at the legal and regulatory framework around bribery and corruption. Module 3 then examines the links between bribery and corruption and money laundering, and Module 4 goes into some depth to look at the sources of risk around the whole subject of bribery and corruption. Module 5 then looks at customer due diligence in respect of bribery and corruption. Module 6 then examines risk management and a risk-based approach to making sure that you have the right sort of controls in place to stop bribery and corruption. And finally, Module 7 examines the policy and standards that you need to put in place. Jonathan has now explained to you what the Financial Crime series has in terms of the detail involved. So what we'd like to do now is move on and give you an excerpt from one of our courses. The course in question is Anti-Money Laundering, and it's Module 2 on terrorist financing and tax evasion. So I'll hand you over to Jonathan to take you through this small part of the course.
The objectives of this course are to obtain an understanding of the true nature, sources, and risks posed to both institutions and the wider society by terrorist financing and tax evasion. And let me repeat again from AML 1, this isn't just about the movement of money. It is also about what happens before the money is realized, or before the money is moved, or before the property is moved. Now we'll take a closer look at terrorist financing. What we will be looking at to begin with is extracts from the International Convention for the Suppression of the Financing of Terrorism. This is a UN convention, and we start with a definition which basically says anyone who willfully collects money which they know is going to be passed on to someone for the use of a terrorist act is committing an offense, and they don't care where you are in the world. Therefore, under the Suppression of Terrorism Act, we have terrorist offenses such as the hijacking and seize of aircraft, attacks against airports, and this dates back to a time when hijackings were very common, especially in perhaps early 80s as well. Attacks against maritime navigation, terrorist bombings, which have been ever present, crimes against internationally protected persons, and this harkens back to a time when diplomats were being kidnapped and held hostage. So the taking of hostages naturally follows from that, and very importantly, the physical protection of nuclear materials. Now we come to a more generic definition of terrorism, and it's basically saying that anyone who inflicts harm on civilians or non-combatants with the distinct objective to force them to do something, or force a government to do something, or to intimidate, is basically committing a terrorist act. That is the generic view, or the generic definition of terrorism. Under international guidelines, countries are supposed to criminalize terrorist financing, meaning that because it is criminalized, that's when banks and institutions and organizations have to make sure that according to regulations, they do nothing to facilitate it. So it is a criminal act. Actually, it is a sanctioned act. So this is an internationally sanctioned act, terrorist financing. Here is one of the most amazing pictures you might ever see, or images you might ever see. It's a long line of brand new Toyota vehicles stretching as far as the eye can see, owned by Daesh, because they were funding themselves to the extent of $2 billion annually. Extortion, kidnapping, sales of oil, that is how big. They have made terrorist financing, or put terrorist financing on a completely different level. But that's what we're talking about today when we're talking about terrorist financing. Here we have an example of a United Nations Security Council resolution on terrorist financing. The UN Security Council is just about the highest legal authority in the world. When they issue a resolution such as this, then everyone has to obey. And you see, this is a unanimous resolution. 2199 condemns trade with Al-Qaeda and associated groups and reminds us that these are sanctioned activities. It's tightening up the sanctions against the financing and support of terrorist groups. It is said that one man's terrorist is another man's freedom fighter. So that's why we use the word designated terrorist organizations. And interestingly, this graph, you'll see this huge spike in 1997, which is about the time the International Convention came about. This was immediately after, more or less, bin Laden got kicked out of Sudan and Al-Qaeda came on the radar. And terrorism started to be looked at from an international perspective, hence that peak around 1997. But as you can see, various groups have been added throughout the years. In another module, when we talk about sanctions, we say that no amount is too small when it comes to terrorist financing. So the sanctions are there irrespective of the amount. And we can see why. These are some of the more infamous terrorist attacks in recent years. And you can see none of them exactly cost a lot of money. And that is one of the most interesting features of terrorist attacks. It doesn't cost millions of dollars to stage a terrorist attack. Even then, it will still cost hundreds of lives and millions and probably billions of dollars in damages. And that is why no amount is too small when you're looking at sources and the funding of terrorism. One very interesting thing about terrorist financing, it can come from both legitimate and illegitimate sources. It can come from acts of extortion and ransom. It can also come from sources which are merely legitimate sources of people who believe they should support such an endeavor. Here are some of the typologies for terrorist financing, and we've talked about or mentioned some of them already. Basically, criminal activity, kidnapping for ransom, extortion, drug trafficking, for example, the poppy season in Afghanistan, the opium trade. That is a main source of financing for the Taliban. Also smuggling and outright fraud. Here we have a study by the European Union on ransom money financing terrorism. And it's about how Al-Qaeda in the Maghreb, which is Arab North Africa, is competing with Daesh to see who can extort the most money, which makes them more viable than their competitor. Here is one of the most important terrorist financing typologies: charities, charitable organization, fundraising and giving to a cause. Again, the money can come from legitimate sources or people who will actually give to a cause, but very often it is disguised, where people believe they're giving to a great cause, but it ends up in the wrong hands. And there are a number of reasons why regulators focus on charities. It is because they are very susceptible to being abused. And we're going to take a further look at this. Why are charities so abused? Well, here's some insight from the Charities Commission in England and Wales. First thing, people traditionally trusted charities, especially if it was for what appeared to be a good cause. So people were motivated to give. They're relatively easy to set up. And here's the key thing. It says there can depend on small number of individuals. From the wider perspective, it really means, what it really means is, generally speaking, they're not very well regulated or very well managed. And therefore, they leave themselves open to some form of abuse because they just don't have the type of controls necessary to ensure that all their monies are being put in the right direction. And what is worse, when their corporations are complex and they're operating from many countries, that further reduces their ability to actually control the flow of funds properly. Here are some additional findings from the Charities Commission. If these charities are in many countries, the management of them is only going to be as good as the regulatory environment in that country. And of course, if they do have weak internal controls and a governance framework, that further ensures that they are open to abuse and readily facilitate the diversion of funds, whether it be to terrorist financing or something else. Here's one of the other things we really need to focus on, because as we shall see later, when we're looking at CDD, KYC, we're talking about what's your source of funds, what's your source of wealth. With charities, that is very difficult to predict because the inflow might be irregular. So it's very difficult to say how much money do you expect to have. And that means it's very difficult to tie down what an income stream should be, and therefore they can more readily facilitate some of that money being siphoned off to other purposes. Here's a little schematic which brings together how charities are exploited and abused. So we have the fundraising. You can have straight diversion of funds, or you can have charities which are originally set up for illegal and improper purposes, but of course they're disguising themselves as doing good for the wider humanity. Sometimes you also have existing charities which are used. Their name and status are such that they can be used, but the people operating behind them siphon off the money. Or misuse and abuse of charity assets. That's another thing. All that abuse can result in money being diverted to terrorist financing or any other cause, or sometimes just into people's pockets. So out and out fraud is also a part of what might happen with charities. And then once you talk about fraud, you also talk about money laundering. Here is one example of how a charity was abused. Set up to raise significant amounts of money over 2 years by obtaining grants from a government. And this was about supporting students. But intelligence, and this is why it's so difficult for banks and institutions and why they have to work with regulators and governments, intelligence discovered that some of the people behind the charity and the controls of the charity were linked with violent extremist groups. But there were also other indicators. So one of the things they realized that the students they were supporting, there was an unrealistic growth. It didn't make sense that the student numbers grew so rapidly. And so that tend to suggest that they were being fraudulent about what they were requesting and the funds they were demanding. And therefore, there was fraud, which also resulted in misappropriation of funds, which then went into terrorist financing. Simply recapping the module learning objectives, what we're saying is that you should now have a better understanding of the true nature, sources, and risks posed to institutions, organizations, and the wider society of terrorist financing and tax evasion and the impact it has on people's lives, and also what it means that institutions are doing when they're attempting to deter these activities. It goes way beyond the activities themselves to human trafficking, drugs trafficking, arms trafficking, and all those other very, very unfortunate activities. There are a total of 4 courses in the financial crime series: governance, AML and terrorist financing, the current one, sanctions, and bribery and corruption.